Hey everyone, welcome to the Seller Finance and Creative Deals podcast. I'm Dan Deppen, and today joined by Jamie Bateman from Labrador Lending. Jamie, how's it going?
Going pretty well. How are you doing today, Dan?
Good, good. So I've known you for a long time. I don't think I've actually haven't had you on before,
I don't think so.
but maybe you can tell people like a little about yourself and what you do in the world of notes.
Yeah, sure. I've been in the residential real estate investing space for quite a while, I guess since 2010,
Mm-hmm.
and so familiar with the kind of the residential real estate space. Used to work for a title company and a mortgage broker, and just my father was a real estate agent, has been for decades. So I've got a good amount of residential real estate experience, and then in 2018 started moving into buying notes, mortgage notes on owner occupied properties. And so over the last 7, 8 years now, have been pretty heavily focused on mortgage note investing, buying mostly first lien residential, both performing and non-performing mortgage notes across the country, really. And at this point, we'll get into a little bit more, hopefully, about what we have to offer. But I run a mortgage note fund for passive investors and do a couple other things for more active investors. So, there's no, I know you're very familiar with the mortgage note space, Dan, and I'm sure your
Mm-hmm.
listeners are as well. There's no, perfect asset class. Everything has pros and cons. And I like some of the pros about mortgage notes. And so it's kept me in the space since 2018.
Oh, nice. So we started right around the same time then, because I think I discovered it in 17. I bought my first note in like basically this it was like the very end of December 17, and then
Okay.
18 was kind
Yeah.
of when I got going. How did you get started in it, or like how did you find it?
Yeah, I was, had the long commute and was listening to podcasts. Bigger Pockets podcast was a big one, and then started kind of poking around in the forums on Bigger Pockets and discovered tax lien investing and mortgage notes. And um, with residential rentals, that was going well, but I was kind of a little bit, all right, I it wasn't as challenging anymore. It was like I understand it now. I kind of wanted to do something different, and started comparing tax lien investing and mortgage note investing. And the way I got started was a little bit passive. I did a joint venture as the money partner, put my own capital into a joint venture deal. Then I did a private lending deal that same year, and was pretty passive for the first 6 months, trying to learn from other people and network, and informally get mentorship from others who'd been doing it longer. And
Mm-hmm.
then 2019, I started kind of scaling more and doing buying my own notes, and then doing joint ventures myself as the operator, and then doing partials and hypothecations. Then did a non-performing note fund with a partner, and then now I have my own fund with my team. So I've kind of just been scaling along the way.
Yeah, my path is kind of similar. Like I bought a performing note and then I funded a joint venture with somebody else. I don't know if you listened to
Hmm.
like the was it the Note MBA
Oh
podcast
yeah,
at
yeah,
the
yeah.
time, like
Yes,
Chase
yes. I
Thompson.
know what
Yeah,
you're talking about.
they're gone now, but
Yep.
yeah. But actually I did one with one of those guys
Okay.
out the
Yeah, my
gate.
first
But
deal was with Chris Seveny, who you
oh
you
yeah,
know,
yeah.
and it's interesting, an interesting one in Maryland. It's actually the only property that I've been to for as far as a mortgage note goes, and it's I only went there because I live in Maryland. It was about an hour away, and we did a podcast episode on it years ago. We called it Nightmare on Elm Street.
Uh,
We ended up not losing money, but learned a lot.
well,
Didn't
the
make money.
first note I bought myself was in Council Bluffs, Iowa. And part of the reason I bought that one was, like I said, it was like this time of year, and we were
Yeah.
taking a Christmas road trip to Michigan from Colorado, and I was
Okay.
driving right past it because it's like right off I-80. Because I
Right.
wanted to actually just eyeball the property in the neighborhood before I
Right.
did it. So
Yeah. I mean, it is one of the things I love about mortgage notes is you really don't. I mean, I wanted to go to that property like you did, but you really don't need to physically go to these properties. So,
no. No, not at all. But the first one out the gate, I just kind of
Yeah,
wanted to see what was going on.
for
Yeah.
sure. I mean, I used to do that with my rentals. It's like, okay, even once I no longer managed them myself, I would drive through the neighborhood and see my rental property, and but then you start realizing, okay, there it is. There's not much
Yeah.
for me to do here. So and I started to get over that sort of fear of having to focus locally. Particularly in the owner occupied note space, I don't think, I think it boils down to more as far as where to invest geographically. I think it boils down to foreclosure laws and deal flow where you're finding deals.
Hmm.
If you're in the more fix and flip space, I think that's very geographic specific. You really need to know your market. But when I'm buying at, 30 to 70% of LTV or ITV, percentage of the property, hopefully there's some cushion there. I don't need to get that property value 100% correct. I don't need to have a team on the ground all the time ready to go. So it's a little less, I can invest from anywhere. It's one of the things I really like about notes.
Yeah, it's kind of nice. Plus, when you're buying the note, you can't really know the full property value anyways, because you can't
That's
get inside. So even if you're
that's true.
local, you're
That
limited.
is that's a great point.
So
And that's when we've frankly lost money, is when we don't know. We get inside eventually, and then there's all kinds of problems. So that's probably the biggest risk, I would say, in this space, is the property value and the interior, not knowing the state of the interior of the property.
yeah, I've run into that too. It's kind of like when you get like a foreclosure, it's always like it's like the oh, what was the old game show with like what's behind door number one? It's like, let's make a
Right.
deal. It's like,
Yes,
is this like the nice car or like a goat? Like, and it could go either way. So like,
exactly. For sure. Yeah, I know a lot of people are hesitant to touch like loans on vacant properties because they figure the property is not well maintained. But, when it is occupied, like you said, you can't get inside, so there's still risk there. So,
yeah, that's one I've learned. I've done two non-performing notes where the properties were vacant
hmm
and neither one of them turned out great. So
right.
I just,
Sure.
yeah. So well, cool. So what kind of areas like do you generally like focus on, or like what's your like buy box typically
Yeah, I
for
mean,
notes?
for the most part, probably like a lot of people, we buy largely in the Midwest and Southeast. The buy box has certainly expanded over the years. Uh, we do like to buy in more fast foreclosure states. Not that we're trying to kick people out of their homes, but that is just a factor in this business from a business standpoint. And so also just in states that don't have large fluctuations in property value, like I said, Midwest and Southeast kind of fit the bill there. But we've
Mm-hmm.
purchased in probably 25 to 30 states. I think our fund currently owns notes in 18 or 19 states.
Mm-hmm.
Like I said, the Ge geography of the buy box, the states we buy in, has the number has expanded for sure. But understanding foreclosure laws is something that people really probably underestimate, the importance of when they first jump into this. So I'm not tied to any one particular state. A lot of it is dependent on deal flow and then foreclosure timeline and costs.
Yeah, because it's hard to be too selective. Otherwise, you end up not
Yeah,
finding anything to buy. So maybe you could talk a little bit about like how you manage the assets in your fund and like how you're
yeah,
set up to do like what that looks like day to day.
sure. Yeah, so we've got three different core services, and if people are interested in learning more, obviously go to our website, labradorlending.com. Um, we serve the passive, hybrid, and active investor. And so with the fund, we serve the passive investor. Those investors are accredited investors. They want to put capital in, and then we go out and buy mortgage notes. Our investors get a preferred return. It's a targeted preferred return monthly. And as far as asset management of the fund, it's definitely where we spend the most time regarding the fund. Running a fund, to more directly answer your question, running a fund really boils down to three things: raising capital, finding deals, the notes themselves, and the third piece is managing those first two. So managing the
Mm-hmm.
capital and managing the notes. Asset management, when I say asset management, like you asked about, really is managing the notes. And especially if you're buying non-performing notes, there's a good bit of work there, tracking taxes and insurance, managing the vendors, so managing the loan servicer, managing attorneys, managing maybe an REO company or property manager, that kind of thing, managing document custodians. There are a lot of vendors in this space that we've vetted and we work with. So from a day-to-day standpoint, asset management of our fund definitely takes up the most time. I have a team who works for me, with me, and two of our team members have worked for me for several years. And so we've been doing this for a while now. We use Podio. It's actually customized for note investing, the software
Mm-hmm.
that we use. And so it's interactive. It's not perfect, but there's still that human element that's needed. The software doesn't just manage everything, but it's a great
Yeah.
place for us to manage all of the kind of minutia with, like I said, taxes and insurance and just monitoring borrower payments and borrower communication through the servicer. We don't typically deal directly with borrowers, but tracking the payments that are coming in and the borrower communication, and then managing vendors. Podio is our primary asset management software, and that's been good. We've tailored it, we've customized it, and it's always a work in progress. But yeah, it there's a good amount of work involved in asset management for sure.
Yeah, I found that I've had to really stay on top of my vendors. Like when I came into the business, I joined this mastermind. Chris 70 was in it
Hmm.
as well. And kind of the way that guy taught it was, oh, this is fantastic. You have your loan servicer here and your attorney there and them here, and
Yeah,
they just do everything for you and life is good.
right.
But that this is just,
It's just not
unfortunately,
true.
it's not the way it
No,
works.
exactly.
Yeah.
And I did a presentation for the Cash Flow Expo, just comes to mind, about
Mm-hmm.
the um, the spectrum of passivity or passiveness, I think we called it. And yes, there's so many gurus out there, Dan, to your point of that promise mailbox money, and this is so easy. You're drinking Mai Tais on the beach, and you just get ACHs coming in, deposits, and it's just not like that. I mean, you can buy a handful of performing notes and make some cash flow each month with minimal work, but it's not going to change your life, right? So
Mm-hmm.
there's work required here. And so, it's mostly asset management, and that's why I was working with I do mentorship, one-on-one mentorship for people who want to learn this business, learn, whether they want to buy one note or they want to scale from 10 to 20 to 50 notes, both the due diligence of and building your buy box, building out your due diligence checklist, learning how to do underwriting, that kind of thing. Also scaling on the money side. So I do mentorship for people. I've been doing mentorship for years, and then we've had our fund for our current fund for over 3.5 years. And so
Mm-hmm.
we were serving the active investor and the passive investor. But what I've more recently realized is there's this in between subset of people where they're not really active or passive. They may have some capital that they want to put to work, but they still want that control that you lose, frankly, when you put money into a fund. You really have to trust the operator when you're putting money into a fund, like our
Mm-hmm.
integrity income fund. Our investors, there is risk. They have to trust us that we're making right decisions, and that I'm not going to run off with their capital. Well, these what we're calling hybrid investors, they want that control, but they may not have time or energy or the desire to manage these assets. So that's where our asset management service comes in to really help the hybrid investor who wants to understand what they're buying. They don't fully maybe trust, they easily, and they want control. Maybe they want to build out, they want access to the property. They want to focus on a particular area geographically, like we were talking about. They want to decide which notes they want to own, but they don't want to do the legwork of the day to day. And so we're now filling that void for that hybrid investor through our asset management service.
Nice. Nice. So how does that work like for the investor, like day to day? So basically, I guess like for them, they're basically they just have to work with you, and then
Yeah,
basically you're handling the rest of it.
exactly. I mean, they still have full ownership of the note. We'll just talk about one note, but they could have 10 or 50 notes.
Mm-hmm.
They own the note. I don't have my company has no ownership of the note. It's not a joint venture or anything like that. We're providing a service to manage that note for them, manage the servicer, manage the attorney, like we were talking about. And this is what we've already been doing for years for, our funds. And
Mm-hmm.
so we've been doing this asset management for ourselves, for our passive investors and the notes that our fund owns for years. And so it's really not any different from our standpoint as far as, the work involved. It's just more of the same. And
Mm-hmm.
so from the investor's standpoint, they still have full control of what notes they buy, what servicer they want to use, technically what vendors they want to use, but we will manage the day to day of that. And they still have strategic decision making authority. And if they're not happy with the service, they can cancel it, And so
Mm-hmm.
they're just outsourcing that day to day management of those notes.
Uh-huh. And then how do you handle that with their like, does their like loan servicer have to, you basically have to give their loan servicer permission or give you permission to access
Yeah,
all their stuff or
that's a great question. We've kind of it is fairly new, frankly, and we've navigated some of those nuances through, just hey, we're doing the asset management. So far, it's just been an informal email. Hey,
mm-hmm.
this team is handling the management for me, so you can speak with them. They can approve or disapprove invoices, for example, that kind of thing.
Mm-hmm.
So it hasn't been an issue thus far. We've been doing it with only one servicer, and they've worked well with us.
Uh-huh.
So that's a great question, and frankly, there are some, probably will be some bumps in the road as we expand this service. Um, so yeah, it's been going well so far. Nothing we can't overcome.
Yeah, because I've done a lot of, joint ventures and loan hypothecations and with investors, and occasionally an investor's like, well, I want everything titled in my name. And my response to that is always, well, but then you've got to have the servicing, you got to have the stuff, you got to get in it. It's a pain in the butt. Like, it's
Right.
not worth it for me to mess with all that.
Sure.
Like, I'm making this passive for you. So everything's going
Right.
to
Do you
be
want a
in my
passive or not?
entity's names. Yeah. And if you don't want passive, that's fine.
Right.
You can go do it yourself and you'll make more, but then you got to
Right.
do the work,
I
to
mean,
do that.
a lot of it, frankly, depends on the level of that they want to be. How much does the investor want to be involved, right? And
Mm-hmm.
so, what we've been doing so far is providing weekly reports to our asset management clients, which is literally just a spreadsheet that summarizes. All right, this is the most recent update from this asset. This is the next step. These are how we see the next few months playing out, and
Mm-hmm.
providing that as just as a weekly update to our client. If they want to be more involved, they can be. But the whole point of this is for them to still maintain control, but have a more passive, relatively passive way of of income. And so the point is not to have that client be super involved.
Yeah, and I was
Um,
going to say weekly is a lot for notes. I would have
right
guessed
now,
like
right now,
monthly. Yeah.
so right now, the primary focus on for our asset management service has been on these their HUD HECM, their reverse mortgages. We
Mm-hmm.
bought one client bought a bunch of these last year in the last few months, I should say, and there are a lot of moving parts with those, and so weekly reporting thus far hasn't really been overkill. In general, we're probably going to move to a monthly reporting schedule because you're right. It's like see last week's report. Not a lot has
Yeah.
changed.
And for people who aren't familiar with it, maybe you can explain a little like what a HUD, what a HECM loan is, because
Yeah,
those are ones that I've looked at in the
right.
past. I've never actually bought one of those
Yeah.
myself.
So, yeah, absolutely. And one of the challenges, and you know this as well as anybody with in this space, has been deal flow.
Mm-hmm.
In a lot of ways, it's somewhat dried up, and there's still plenty of opportunity in this space. Don't get me wrong, but because kind of the more traditional NPLs haven't been as prevalent, in the last couple of years versus when you got into the space, for example, in 2017. And even before that, there were a lot more. So we've had to pivot and look for different opportunities We've bought fix and flip loans, for example. But one of the ways we've pivoted as far as deal flow goes is focusing on these HUD HECM mortgages. And so HUD puts out several times per year, they'll put out a huge offering, and they've changed the way they've done it. It changes, all the time. And so
Mm-hmm.
probably as soon as I say this, it'll be wrong for next time. And there's always red tape because you're dealing with a government agency. We have a pretty good access into these trades. And so just to break down what a HUD HECM mortgage is or loan is, it's a reverse mortgage that elderly people can take out, and then what ends up happening obviously is eventually they pass away. So HUD will put out these tapes, these large offerings of thousands of loans, and for the most part these are on vacant properties with deceased borrowers where it's actually underwater, so the full legal balance is greater than the property value. So all that is to say, that you're looking at this tape, and really what it boils down to when you get these tapes from HUD, the biggest thing you're looking at is the property value. So HUD will have their own BPO value on there that they've paid a third party vendor to go do a broker price opinion on this property. Well, a lot of times those are wrong. And so you can find opportunities where the local market, or you have boots on the
Mm-hmm.
ground and no, this property is worth a lot more than what HUD thinks it's worth, for example. And in these cases, you have interior photos. You actually have interior, maybe not
Yeah,
physical
because the
access.
properties are vacant,
The
right?
properties are vacant, the
Borrowers.
borrowers are deceased, and so it's really a pre-REO play. So you are buying the note, but you're going to exit through the property. So as you know, when you buy a non-performing note first lien, there's really only you're exiting through. Typically speaking, you can only exit through the property or the borrower.
Mm-hmm.
You could sell the note as well, but when that borrower is deceased, there may be heirs involved, but you're almost certainly going through the property. So with these HUD HECM reverse mortgages, the property is the focus, and the property value is the focus. And really, what it ends up being coming down to is either a foreclosure or a deed in lieu of foreclosure. And so, estimating these property values is critical, particularly with these HUD HECM uh, deals. And
Mm-hmm.
so, we've gotten more involved in these primarily because deal flow hasn't been as good in the last couple of years, and because if you think about it, there are a lot of baby boomers that are starting to pass away, and it's that's not going to slow down anytime soon. And so HUD works with nonprofits, and there are, like I said, certain regulations you need to follow, certain hurdles you need to overcome to purchase these notes. And then as you exit through the property, there are certain reporting requirements. So in some ways, they're a little more involved than your traditional non-performing loan that you're buying. But in other ways, they're actually much more simple because, again, there's no borrower. There's no
Borrower's not
workout.
going to fight you. Yeah, you're
No,
not.
there's there's no workout. There's no creative solution going on here. It's you're exiting through the property. Is it a deed in lieu or foreclosure? How much is that property worth? That's it's actually fairly straightforward from that
So
standpoint.
if there's a deed in lieu, I guess I assume that would come like from the heirs. So the heirs would end up
Exactly.
with the property and then they would just sign off because,
Correct.
you
And
know.
then that comes down to, is there a personal representative of the estate established that you can work with? The first one I bought was it was through Get
Oh
and
yeah, I bought through them
yeah,
before.
yeah.
Yeah.
And we got a deed in lieu like within a month or two because my attorney
Mm-hmm.
tracked down the representative, and we didn't make a killing on it. We made a little bit, but it was it was a very efficient process. But
Yeah.
in some cases, there is no representative, or the heirs just want nothing to do with any of this, and they're just unresponsive. So you've got to
Yeah.
go through with the foreclosure. And in other states, frankly, the foreclosure process is actually faster than any kind of deed in lieu you're going to get anyway. So for example, I bought one a few months ago, and we have a foreclosure sale date here in a couple of weeks in Tennessee, and we'd floated the idea of a deed in lieu to our attorney, and granted they get paid more with the foreclosure, so got to take
Yeah.
what they say with a grain of salt. But I do believe them. It's faster than we would have gotten a deed in lieu done. So
Yeah, I was going to say the one foreclosure that I've done in Tennessee, it was crazy fast. I think it was like maybe 2 months, if I remember right, maybe a little
yeah.
more than that.
Hmm.
And my attorney actually like laid out the schedule with all the
Okay.
dates and we followed it.
Nice.
So I had, yeah. So I
That's
can
rare.
imagine in a scenario like that where there's, nobody's going to fight you on it, that goes pretty quick.
Yeah, exactly. We'll see. I mean, it hasn't happened yet, but it's supposed to be here. I think it's the 19th, I believe, of December. Um,
Mhm.
and so, and again, we're not kicking anyone, we're not evicting anyone. There's no one in the property. And HUD actually represents, they guarantee that it's vacant, and they guarantee that the title is clear and
Oh,
yeah, which is really nice. They represent they guarantee what they represent. So there's a long list of things that if it's not true, you can actually HUD will buy back the loan, or they will reimburse you for certain costs and things like that, which is nice.
yeah, that's kind of cool because normally notes are extremely buyer beware,
Yes,
and people will try to sell you bad notes and all kinds of stuff.
for
So,
sure. And so yeah, there's red tape, but then there's some kind of security in dealing with a government agency as well.
yeah, that's super cool. Yeah, like I said, I haven't actually gone through with one of those
Yeah. Most of
just yet.
my fund is we buy mostly reperforming notes. So these types of deals aren't the focus of the
Hmm.
fund because it's an income fund. But because, like I said, we've had to pivot based on market conditions and less deal flow. Reperforming notes, if the yields have come down, let's be honest, right? And so you're seeing
Sure.
people move into private lending or a lot of seller finance, and like you obviously work a lot with, Dan.
Yeah.
And the yields, if I'm paying my investors 8 or 10% out of my fund, I've got there's a small management fee. Well, where's that spread coming from, right? If you're buying notes at 12 to 14%, which is pretty high, right? Relative,
Hmm.
where's that spread coming from? So we've had to pivot, some within our fund to purchase these more non-performing notes, including these HUD HECM deals.
Yeah, kind of my personal view on the market is we had this blip through the financial crisis where there was this wave of like institution, like bank created notes
Hmm.
that were distressed, and that's kind of been worked off. So now I feel like it's going back to seller finance notes, which is kind of where the market for individuals like always had been for decades
Sure.
prior to that. But yeah, and then one of the plays I recommend to people is 90+% of the seller finance notes are created all wrong.
Mm.
And no institution is ever going to
Touch
touch
them.
those. So what you
Right.
can do is you can get discounts on those and you can go buy those up from the people who are interested in selling them. And then if the borrower cooperates, create a new
Sweet.
loan and create a good one that now, if you want to, you can wheel around and sell to an institution because there's actually a lot of institutional demand for either like non-QM loans, which are like
Hmm.
exploding, which are
Hmm.
basically like well originated seller finance notes
Okay.
when
Yeah.
when you get down to it. So
Right.
my play lately is almost like intentionally buy bad stuff and then
Right.
and then fix it. And
Right.
it's a numbers game. The borrower's not always going to cooperate. You know,
Sure.
but
Yeah, no, that makes a lot of sense because there's buying performing loans or even reperforming loans. Just generically speaking, there's not much wiggle room to add value, right? I mean, because you're not buying at a crazy discount. So how do you add value to something like that's a cash flow play? But that makes a
yeah,
ton of sense.
and
I
and
like
that's
that.
hard because if it's like a super solid cash flowing note,
Right.
it's probably going to get bought by an institution with a super low cost of capital. Because even like a lot of the smaller banks are buying these. So
Right.
whether you're an individual or a fund or whatever, yeah,
Right.
your cost of capital is going to be too high to compete
Right.
with
Right.
that. So
But no, I like it. It's another great pivot. I mean, you gotta. you got to change your strategy when the markets, dictate that. So, but I do love this space in general. It's relatively slow moving. You know what I mean? It's
Hmm.
you're paying attention. You can
It's
make,
super slow moving. Yeah.
yeah,
It's too
yeah,
slow moving. Yeah.
right. It is, but like, compared to, you're not going to see these fluctuations. I mean, it's, compared to the stock market or something like that. I
Yeah.
mean,
Or like Bitcoin or something like that. It's not
right.
gonna, yeah.
No. So if you're paying attention, you can make some pretty smart investing moves ahead of time. And, like I said, baby boomers, like that, those numbers aren't going to change overnight. There's a lot of them. So that's going to be the
Hmm.
case for a while. But no, I love the note space, and it's been really good. And I don't look at it like, oh, I stopped doing rentals and now I do notes. I mean, I still have a rental portfolio. I still like rental properties. This is just another, and this is my primary focus is mortgage notes, but it's one of many quality asset classes. And there are a lot of perks to it for sure.
Yeah. And that's pretty common. I think like usually people who get into notes are into all kinds of other stuff
Yeah, for sure.
as well. So, well, cool. Well, thanks for joining. So, yeah, so we had so talked about the fund,
Yeah,
the asset management, and then the
right.
mentoring a little bit. I don't know if we got into
A
that
little
too
bit,
much,
yeah.
but yeah.
Yeah, and that's mostly one-on-one. And we also just with the mentorship briefly, we have a small community that we're growing online, which has been great. So, mentorship can be great, but we also, I can't be there for everybody all the time, obviously, and I don't know everything, of course, right? So I learn things in my community as well, for sure.
Hmm.
So the community has added a lot of value to our mentorship program, which is more for the active investor. So we are definitely serving the passive, hybrid, and active investor through the fund, asset management, and our mentorship program. And LabradorLending.com has a lot of information, and I'm happy to hop on a call or share information via email if anyone's interested. So really, really
Yeah.
appreciate you having me on, Dan.
Yeah, anytime. I appreciate you being here. And then, yeah, then after this, just send me all the links you want me to include, and I'll throw those into the description so people can get to them
Perfect.
easily. So,
Yeah, and I also have my podcast From Adversity to Abundance. I have to have you on if you have if I can.
yeah, I can do that whenever. Yeah,
Yeah, so that's been a fun project as well for the last few years. So would love the listener to check that out and see if we can add a little value there too.
for sure. Awesome. Well, thanks again, Jane. Appreciate having you on. Have a good one.
You too. Thanks, Dan.